Hey, welcome to The Explainer. Today, we're going to dive deep into a huge question, one that basically splits the entire world of real estate right down the middle. It's a massive debate about strategy, about risk, and really about what it means to build wealth with property. So, are you building a machine that cranks out cash, or are you just placing a bet and hoping for the best?
So here's how we're going to break it all down. First, we'll set the stage for this great debate. Then we'll explore the two big philosophies, the cash flow machine on one side and the capital gains gamble on the other. After that, we'll talk about the unique power that real estate gives you, something called control. Then I'll get real about the risks. It's a minefield out there. And finally, we'll wrap it all up to help you figure out which camp you're in, investor or speculator.
All right, let's jump right in. This whole debate really comes down to one simple question, but it's a big one. And honestly, the answer might make you rethink everything you've ever been told about what's probably the biggest purchase of your life.
Now, I know what you're thinking. Your gut reaction is, of course it's an asset. My house is worth a ton of money. But what if I told you that to a professional investor, that house, it's not an asset. It's actually your biggest liability. Yeah, I know, it sounds nuts, right? But the logic behind it is actually incredibly simple. See, it all comes down to one thing, the direction the cash is flowing. It's that simple. Think of it this way. An asset is anything that puts money into your pocket, week after week, month after month. And a liability? Well, that's anything that takes money out of your pocket. So that home you live in, with the mortgage, the property taxes, the insurance, all those repairs, it's just a constant cash train. It doesn't pay you, you pay it. And that one distinction, right there, is the foundation for everything else we're going to talk about. So that brings us to the first philosophy, which I love to call building a cash flow machine. Look, this is not about getting rich quick. This is about looking at every single property like it's its own little business, a gear and a bigger machine that's designed to just crank out a steady, predictable flow of income that works for you, whether you're sleeping or on vacation. And you know what? There's a perfect example of this in action, and it might surprise you. See, Ray Kroc, the guy who blew up McDonald's, he always said, "I'm not in the hamburger business. I'm in a real estate business." Think about it. The person running the McDonald's, the franchisee, they're selling burgers to pay the rent. But who do they pay that rent to? To McDonald's corporate, because they own the super valuable land underneath. The burgers are just the engine that pays for the real asset, the real estate itself. So if you want to think like a true cash flow investor, you have to become obsessed with one specific number, and that number is net operating income. You'll hear pros call it NOI. Forget about the purchase price for a second. The NOI is the pure, raw profit of the building. Basically, you take all the rent you're bringing in, then you subtract all the real costs of running the place, like management, repairs, taxes, and insurance. And whatever's left over, before you pay the bank, that's your NOI. It's the financial heartbeat of the property. And this, right here, is where the magic happens. See, the value of your house is based on what your neighbor just sold their house for. It's based on comps. You can't control that. It's just whatever the market says it is. But an income property, it's valued like a business. Its value is directly tied to its NOI. This means you are in the driver's seat. If you can figure out how to raise the income, maybe add some laundry machines, or cut your expenses, you directly increase the NOI. And when the NOI goes up, you literally force the value of your property to go up, no matter what the rest of the market is doing. That's real power. And this way of thinking, it completely flips how you look at debt. We're all taught debt is bad, right? But a cash flow investor sees it differently. They see good debt and bad debt. Bad debt is, putting a vacation on a credit card. It just takes money out of your pocket. But good debt, that's when you use other people's money to buy an asset. You're using the bank's money to buy the building and your tenant's money to pay the bank back. And you get to keep what's left over every month, all while the tenant is buying you the entire building. It's an incredible tool. Okay, so there's this really cool strategy that puts all of this together. It's called the BRRRR method. First, you buy a property that needs some work. Then you rehab it, fix it up, and force that value higher. Next, you rent it out and get that cash flow coming in. Now, here's the magic step. You refinance. You go to a bank and they appraise it at its new, much higher value. And you get a new loan that lets you pull all of your original cash back out. And then, the best part, you repeat. You take that exact same pot of money and go do it all over again. It's like a cheat code for building a portfolio. Okay, and if all that wasn't cool enough, there's this massive tax benefit called depreciation. The government basically says, hey, Your building is getting older, so we'll let you pretend it's losing value on your tax forms, even if it's actually going up in value in the real world. This creates a paper loss that can wipe out your real cash profits. So you could have thousands of dollars hitting your bank account every year that, thanks to the tax code, is totally tax-free. They call it phantom income.
All right, so let's switch gears and talk about the other side of the coin. This is the philosophy you see on all those TV shows, the world of flipping houses, of buying something today and just hoping you can sell it for more tomorrow. This is the capital gains gamble, and it's a totally different game with a very different set of rules and risks. And this quote right here, wow, it doesn't pull any punches. It's basically saying that when your whole game is just hoping the price goes up, you're not really investing. You're speculating. You're gambling. You're betting on things that are way outside of your control.
And really, the difference in mindset is everything. The investor asks, how much cash does this thing produce for me every month? The speculator asks, how much more can I sell this for later? The speculator is totally fine losing money every single month because their entire plan depends on finding what they call a greater fool, someone who will come along and pay them more than they did. They aren't buying a business, they're buying a lottery ticket.
And man, this is a perfect real-world example of the danger. Picture this, it's 2006. The real estate market is on fire. A developer starts building this huge, beautiful apartment complex, and their entire plan is to sell it for a giant profit when it's done in 2008. And then 2008 hits. The music stops, the market crashes, the banks stop lending, and the buyers are gone. They bet everything on the market going up, and it didn't. They were wiped out. So all of this leads to what is probably the single biggest advantage real estate has over something like stocks or crypto: control. This isn't about just buying something and hoping for the best. It's about having your hands on the levers that actually determine whether you win or lose. But first, let's be honest about the trade-off here. Real estate is famously illiquid. It's not a speedboat, it's a giant cargo ship. You can't just turn on a dime or sell your entire apartment building with the click of a button. It takes months. And that lack of a quick exit, that's a very real risk you have to respect. But here's the flip side of that big, slow ship. It gives you control. When you own a stock, you're just a passenger, hoping the CEO knows what they're doing. But when you own the building, you are the captain. You're at the helm, and you're the one steering the ship. I mean, just think about it. What other investment lets you do this? You can directly control the income by raising rents or adding new services. You can directly control the expenses by finding ways to operate more efficiently. You can control the debt by deciding when to refinance. You can control the physical building itself. With a stock, you can't call up the CEO and tell them what to do. With real estate, you are the CEO. Okay, so having control is great, but don't get me wrong, this doesn't make it easy or safe. Not at all. Real estate is an absolute minefield for people who don't know what they're doing, and even the pros face huge risks that can take them out. Just look at this number. It is absolutely staggering. It's what the experts are calling the wall of maturity. Basically, it's almost $2 trillion in commercial loans that were made when money was cheap, when interest rates were near zero. And now they all have to get refinanced at today's crazy high rates. For a lot of these building owners, their new mortgage payment is going to be more than the building even makes. It's a huge problem that could cause a wave of foreclosures. And beyond the big market risks, there are a million ways to shoot yourself in the foot. You can ignore the oldest rule in the book: location, location, location. You could skip an environmental check and find out you just bought a toxic waste dump. You could use the wrong legal structure, like putting a rental in an S-corp. That can create a tax nightmare you never saw coming. And then there's one of the most dangerous traps of all: the personal guarantee. And that last point, the personal guarantee, listen up, because this is a big one. This quote is so true, it's scary. When you personally guarantee a lease, it means if your tenant goes out of business 2 years into a 10-year lease, the landlord can come after you personally for the other 8 years of rent. It means if the deal goes bad, they can come after your house, your car, your savings, everything. It's a potential life sentence for your finances. And just to show you how projections can be completely wrong, let me tell you this crazy story. An investor had this perfect plan for luxury condos. The spreadsheets looked amazing. But then it turned out the land was an ancient burial ground. So they changed the plan to a cemetery, and believe it or not, the spreadsheets looked even better, like a $20 million profit. But it was all just garbage in, garbage out. The market wasn't there, the deal was a total disaster. It's a huge lesson that no matter how good the spreadsheet looks, reality can always throw you a curveball. Okay, so we've looked at the two big philosophies, the power of control and some of the massive dangers out there. And it all really comes down to a choice.
a choice about what game you really want to be playing when you put your money on the line.
So let's just boil this all down into a simple comparison. The cash flow investor's goal is monthly income. The speculator's goal is just price appreciation. The investor's strategy is buy and hold. The speculator's is buy and sell. The investor takes on operational risk, like tenants and vacancies, which they can control. The speculator takes on market risk, like price drops, which they absolutely cannot control. One's about building a business. The other, it's about placing a bet.
And listen, this isn't just some academic exercise. This is a powerful mental model you can use for any financial decision. The next time you're about to buy a stock, some crypto, or a piece of real estate, just ask yourself one honest question. Am I buying this because it produces something for me? Or am I just buying it because I'm hoping to sell it to someone else for more money later? Knowing the answer to that question is everything.
And that really brings us back to the core question, the one you have to ask yourself. As you think about your own financial future, which path are you choosing? Are you going to be the person meticulously designing and building a machine that's made to generate income, putting you in control of your own destiny? Or are you just walking up to the table, putting your chips down, and placing a bet? The choice is yours.